traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Oh, yeah. Tasty Nation, good morning.
Life goes by fast, really fast. One day we're 25 and living large, and the next day we're 65 and hopefully still living large. It's the 40 years in between that are mostly a blur. When asked what they would do differently, most people confidently say, nothing. I have no regrets. As much as I want to believe them, I know better. I believe there's one common regret virtually everyone chooses not to remember. It's the taboo topic of not taking as much risk as possible every chance you get. Remember, the genesis behind tastylive was to encourage risk-taking. What were we thinking? Imagine the risk of building a business designed to encourage people to take risks. One of the things I've learned about taking risk, it's not personal. You can't let your ego dictate your decision-making. Unless, of course, you're the richest person in the world, then it's a death trade. Another thing about taking risks is that it's never obvious. There are no easy decisions. Risk-taking should be fun, engaging, and challenging. But if it ever seems apparent, success will not be easy. The great thing about the world of finance is that success does not require genius. In my opinion, the model for success, without a lot of complex math, is relatively straightforward. It's risk times longevity. Between academia and financial media, we have overly complicated embracing the paradox of risk. It's finally time to simplify the model behind success to risk-taking times duration. This definition should give everyone hope and a reason to hang in there.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Oh my goodness gracious. It is Monday, November 4th, a little bit after 5 p.m. Central Time, the best time. You know what that means, everybody. It is time for Tasty Live's evening show, little podcast. I don't know what's going on with this thing over here. Little podcast called The Price of Truth, a place where we like to explore the incentives that govern our world. Thank you for being so patient. It's great to see all of you. Hopefully we didn't lose everybody. I just asked our good friend, our producer, Matt, behind the scenes. I said, what was it like doing the show without me? It was a joke, right?
What do you want me to say? What do you want me to say? Like, really? Like,
Matt, tell him what you said.
I didn't notice that much. I was more concerned about getting stuff ready for the special tomorrow, you know?
Matt said there was not really a difference doing the show.
What do you want me to say? I got to leave early.
He ran replays. Did you guys? You ran replays 5 days in a row. I think. Isn't that what you did? I don't know. He doesn't
we ran the rebroadcast as normal, but I don't think we actually had VODs playing.
You just dropped me from the schedule altogether, and doing that, you still say no difference. What's going on, everybody? Shout out to everybody watching on tastylive.com, as well as all of you watching Tasty Trade desktop and mobile applications. If you don't already have it, go get it. Got it? But if you want to be part of the conversation, there's only one place where you can do that, and that's on the evil Google, YouTube. So head on over there. Type in Tasty Live. Oh man, I'm gonna be in the lines. I'm gonna be in the soup lines. Head on over to YouTube. Type in Tasty Live. Subscribe to the channel and jump on over into this fire chat. And speaking of the chat. This is a show by, of, and for the people, as so few things are these days. So we should say what's up to the people. Shout out to everybody in the chat. Let's get going. Brian, what's up? I see you. Great to see you again. Cato Prime, I don't know what this is. I'll fix it. Somehow. But that's on me. Cato Prime, Cactus Leo, Lone, what's going on? Grumpy Mike, Brian Watson, Docker, I think. Docker, soft A, I'm hoping. Hans, what's going on? VW, IQ negative. Oh, that's how I feel too, my friend. Absolute beginner, Mr. Barbarino, H. Montero, everyone else. Don't be shy, my friends. I'm telling you, it's a great community of people here. Jump on in, start typing random ass characters so we can spoof the Google algorithm into putting us in front of as many people as possible. H. Montero says, quick question. Go ahead and fire away. It's great to see all of you. It's been a week. A lot has happened, kind of. A lot has transpired. Anything big coming up this week? I looked at the calendar, didn't see anything noteworthy. You know what's cool about taking a week off before a week like today? I feel like I'm in a good headspace to navigate this week. Watch, I'm gonna lose 20% of my portfolio. I'm gonna get ripped. I'm in a good headspace coming into this week. I got a couple of things I wanted to talk to you guys about, but I'll ask for a little bit of patience getting back into the news flow. I got a lot of downloading to do. Did some last night. Got a lot more to do tonight. Apparently, Iowa polls, our pets' heads are falling off. There's lots changing. Let's cover it here in just a minute. First and foremost, what a day. NASDAQ all over the place today. E-mini, S&P, who finished positive? The Russell, the little engine that could finish positive in the cash index, up 0.2%. The NASDAQ cash down 0.33%, but it was a wild ride. The Dow down 0.2%. And the S&P down a little bit more than 0.25%. So wild day, but really, if you back out, you went to sleep, and you just woke up and you go, oh, the market didn't move much. For scalpers, intraday participants, this is kind of what you get, right? When the market doesn't want to go anywhere and they're waiting on big pieces of information, you're going to get a bunch of nothing. But in between, brokers and everybody else, I don't say brokers, everybody's got to make money. So you just do this stuff and you get some activity. It feeds the beast, but at the end of the day, risk didn't really go anywhere from an equity standpoint. And from a vol standpoint, we didn't do much either today. Vic, who cares? You should have enough confidence that you can make it back. 20%. 20%. I used to be a madman like that. I used to be a madman out here. Low volume bleeds. What's that mean? Oh, I get it. I used to be a madman like that, just ripping around 20% up, 20% down. I don't play that game anymore. You know what I mean? I got kids. I got kids, homie. I can't play. Honey, we lost 30% of the of our retirements. I can't play that game. But volatility still at 22, right? VIX at 22, and I'm being generous with the two little pennies there, 21.98, and VIX futures at 1950. Sort of makes sense, right? You're gonna see futures trade over cash when there's an immediate, maybe after hours, something like that, when there's immediate grab for vol. In this case, it's a slow bleed, right? I don't think there's a person in the world that's going to wake up today and go, there's an election tomorrow. Bro, if you've got a cell phone, okay, it cannot be me. I said something, I think on Twitter, I deleted it because I was like, you kind of sound like an old person. I was like, I can't be the only one getting inundated by political text. Is that legal? It's just, it doesn't even matter who it's from. It's just constant 5, 6, 7 times a day. It's never happened in the past. And I just thought it was spam at first, and I don't think it is. But anyways, everyone sees this coming, so you've got the opportunity to hedge. You probably do that utilizing index options versus a grab for immediacy in the futures world. I don't know. That's my interpretation, at least for now. But if we get moving, the polls start doing what they do tomorrow in extended hours, you're likely going to see a grab for protection if one exists, or a vol crush. That's obviously going to go to futures first. But I wanted to actually, if I could, with your permission, everybody, way too low. You think so? Rezo says, actually, let's pause here for a second. Rezo says, and I'm guessing you're talking about vol. Vol's way too low. Vote and the messages will stop. That's not cool, Rats Media. That's what I'm talking about. That's not cool. That's kind of that's it's not a threat. It's extortion is what that is. We'll give you your phone back if you go do what we want you to do. It's extortion. Anyways, everybody out in the chat, tell me right now, 2198 in the VIX. Is it too low? Given the events we have on the schedule, given the geopolitical percolation, do you think a 22 VIX is quote unquote too low? I want to know what you say. Yesterday, I think we were around this level, about 20, so a little bit more than 20, and I said it seems cheap, right? That expected move going into Wednesday was 123 points. When I looked at it, I think it was 125 yesterday when Tom quoted it. But the point is, that's about a 2.1% expected move, which means the market expects 2 out of 3 times to stay inside of 123 points, or a 2% move. To me, if you asked me, do you bet the over or the under? Oh, this is a hard one. The trader in me, the gambler, knows you bet the under. The gambler in me knows you bet the under, but for some reason I want to bet the over. And the problem is everyone's betting the over, which is why we're at 22 in the first place. Let's see what you guys are saying. Rezo says yes. VW says 21 is higher than average, so no, not too low. I kind of agree with that. Trader Ice saying the price is just right. That's kind of what options do. Buffalo Bean saying it's priced in. Everything's always priced, right? We've been hovering the low 20s for a while, which is unusual. So what I tend to think about this 18 to 22 range, and I've said this before, and it's not a unique thought. It came to me through an interview on this terrific, network. I had the opportunity to speak with Jem Carson, and he spoke to me about this 18 to 22 range, meaning when the market gets here, there's a reason why it's here. And you have a higher opportunity of those outlier moves when you're in that 18 to 22 range. Whereas when you're everyone tends to think if you have low volatility, then buy it because it's cheap and you're going to get the spike. But the reality is, in lower volatility regimes, you have a higher probability of autocorrelation, meaning higher probability of lower vol than a vol spike. Though everyone out here will say, yeah, but pot odds, Victor, pot odds, sure. So 18 to 22 range, to me, it's just this weird danger zone where it looks real juicy. Vol looks really interesting, and you want to sell it, but you have to understand the odds, the pot odds of the outlier move. And as long as you're defending against those potentials, those outlier move potentials, then I think everybody's fine, or at least you're engaging in a way that you understand that you're not just looking at a 22 VIX and going, oh my gosh, free money. That's not exactly what it is. But as long as we're thinking about it in the right context, I think that's all that matters. I did want to talk to you guys. Let me get off this VIX. I'll come back to vol in just a second. You know me, and I like the most fascinating trade post the cut and into this election and into these candidates. What are they going to spend and what are they going to tax? The most interesting and directly correlated market, in my personal opinion, has always been the yield curve. And I've spent a lot of time over the last couple of weeks and months talking specifically about the yield curve. In my personal opinion, a lot of the other stuff is noise. And I put together, there's a lot of lines on the chart. Some of you might be colorblind like I am. Only dark greens and dark browns. I think it's a third of us. A third of men out there suffer from that type of colorblindness, which is wild, right? Reds and greens. I'm a participant in markets where the only colors you use are reds and greens, and I can't see those. Isn't that wild? Anyways, I want to talk you through something that I found was particularly interesting when I looked at, all the stuff that people are talking about. I don't really want to talk about that stuff. I don't want to talk about that stuff. It's been beaten to death. And for the most part, I think a lot of that stuff is just conjecture at this point. But what I do want to talk about is I looked at the yield curve, the shape of the yield curve at 4 different points in time, and I think it could be interesting for you. I don't know that it's highly actionable one way or another, but I think it could give us some targets as we go into tomorrow and the rest of the week, potentially. This red line, my good friends, it was September 18th. We could take you in the way back machine. What was September 18th? Well, if you remember, the FOMC meeting was September 17th through September 18th, meaning September 18th was the day of the cut, the 50 basis point cut from the Federal Reserve. So this is the shape of the yield curve as of that meeting. I take you a little bit ahead in time to October 4th. Around October 4th or 5th is when Donald Trump starts to separate from Harris in the polling and the betting markets. And you can see this in many different places, but I can even just make it very simple. If you pull up something like DJT, on or around October 4th, 5th, 7th, I think 4th is a Friday, 7th is the Monday, if I'm not mistaken. My dates might be off, give or take a day. But right around then is when you start to see DJT start to perk up as well. I'm not sure what's going on with my chart. It's probably my internet on my side. So we'll give that a chance to load. So here's the point. We start to see on around October 4th, a separation, polls and betting markets. That's the yellow line. So you can see what's happening. The cut happens. We had talked about the potential of the long end to lift. That's exactly what we started to see. October 4th. Now you've got Trump separating himself in the polls. Now here's where it gets interesting. My good friends, don't worry, baby birds, Daddy will feed you. Weird. I'm weird. So the green line is the peak Trump odds in Polymarket. That happened on or around October 29th. Okay, so on or around October 29th, this is the shape of the yield curve. Again, long end of the yield curve continues to lift, higher and higher and higher. We're talking about the 10-year, the 20-year, and the 30-year. All of these things are lifting. Really, the whole curve up until the 2 years are lifting, but the whole curve is shifting upward. Now you have a complete repricing of the betting markets. You have sort of an unwinding in some of the equity markets around the quote-unquote Trump trade, or some of the assets that have been assumed to be correlated along this movement. Whereas one candidate has been moving up in the polls, that some of these instruments have had a correlation with that move. In a way, yields have been correlated with that move. And in my mind, the question was always, because what was written about was the Treasury, the Treasury yields are pricing in a Trump victory. And I couldn't, that might be true. I just could never quite swallow that pill. And so every once in a while, I get one of these things where everybody sort of accepts this narrative that that long end yields would drop on the cut. That was one of those things that I'm not swallowing that pill. This is another one of those that yields moving was a reaction to Trump moving in the polls or people pricing in his presidency. I don't buy it. I might be wrong. I just don't buy it yet, and I'm going to explain to you why. Now, there's been a complete repricing. Here's here's where we stand now. November 4th is the blue line. Notice, with all this repricing of betting odds going back to 50-50 and Polymarket and predicted, actually it's not 50-50. I think it got Harris up by a few points. Kalshi at 50-50 with the unwinding in the equity markets of some of these Trump trades. What's not repricing? I mean, I know there's a little bit of wiggle room, but come on, people. Is a 1 point move in the bonds, even though we've been dropping in ZB and ZN every single day. You got a 1 point move like on Friday or Thursday of last week, and they smashed it down instantaneously. So you almost have, so a 1 point move to the upside in bonds all of a sudden feels like something, but it's not. We moved a few basis points along the curve, but not much has really changed. Now, what this could be, and I hate to be the on one hand or on the other, on one hand or on the other hand type situation, but this means one of two things. It means the bond market does not give a flying you know what which one of these candidates wins. It just doesn't matter. It doesn't matter because the incentives of our world sort of drive are going to drive us to spend more money. They're not driving us towards fiscal austerity, at least not yet. The bond market ultimately has not forced that yet. So it could mean that, or it could mean that that the bond market does need to reprice if for whatever reason Trump does not, if that Iowa poll by Ann Seltzer ends up being even directionally accurate, that independent women are supporting Harris by a margin of 30%. If that's even directionally accurate, then it could have real big consequences into the overall election turnout, which then could mean a repricing of all of these things. I don't buy it. I'm not certain there's going to be this big rubber band back in bond yields, but if there is, the question is what seems more likely? To me, it seems more likely we get to neutral. Neutral was when we were 50-50. This yellow line was what the curve looked like. That's a 30 basis point drop in yields across the curve in the longer tenors. To me, something like that might be in the cards. If I'm wrong, and there is a candidate that is preferred by the bond market, or just certainty is preferred by the bond market, or these yields become attractive enough for people for whatever reason. So I wanted to present visually the reasoning behind why I said on Sunday night on First Call with Tom, I just don't buy it. I don't think the bond market cares because of the incentives of spending and the incentives of cutting taxes in this type of environment and the likelihood of getting something done. But I do think if the election is not as close, I think, as people are saying, then the odds of a trifecta go up. And if the odds of a trifecta go up, then man, I don't know what to think. I don't know what to think about yields. I think that the natural inclination would be Trump higher yields, and then I'm just not sure. If she had a trifecta, do you think the 28% unrealized gains tax, do you think that actually goes on the table? I don't know. I don't know how to handicap that. That's the hardest thing. It's the hardest thing of all these people's proposals they threw on there. They're just saying it for votes, but how do you handicap this stuff? It's pretty hard. Anyways, my point is, okay, Victor, what does that all mean? It means I don't necessarily want to be super short the long end of the curve right now going into this election. I think a trader's bounce in bonds wouldn't surprise me. And I would love a better opportunity to get short. Yesterday we were at 116 and change. I think 116 and 18 ticks, 18:30 seconds in bonds. To me, it seems like we've come a long way in a very short period of time. And a trader's bounce in this stuff would not surprise me. But then November 7th, here's the wild thing. Now go past the election. Assume you get a winner announced this week, which I would price at less than 50%. I think if we get a winner announced this week, it'll be late in the week. And that would be probably only in the scenario that it's kind of a blowout. I think if it's contested, I don't think we got a shot. But assuming that's true, well, what happens at the end of this week? You're going to get a cut to short end rates when long end rates are still trading at and near highs. When mortgage rates are at 7%, we're going to cut the short end of the curve. What does that say? What is that going to say to the bond market? I mean, I know it's already priced in, right? It's already 99.7%. So it's not about whether or not are they going to cut or are they not going to cut. I don't think that's the question. It's just the fact that they're on this path, and we're going to get it cut in November. And if you look at the odds, if we go to December 18th, which is the next meeting, that the likelihood is 4 out of 5 chance that they're going to cut in December too. And I think you're going to end up getting a steeper yield curve by dropping short end rates, and long end rates, I don't know. We stick around 5, or we head towards 5 and we stick there. That's what I think. I'm an idiot. I know this is all hyper. This is very specific. I just want everyone to know out there, this is a total guess. It's a finger in the air type guess, and it's some model that I want to trade around, and if I'm wrong, I'm going to lose money. That's the way this thing works. Let's see what some of you guys are saying, and then I'll continue here. Oh, I can hear my 5-year-old. He's up moving around out there. It's breakfast time. There could be a face ripper looming. See, that's the thing, Rezo. I'm going to get to equities in a second. I'm going to tell you what I think happens with equities and why I don't necessarily want to be short equities here. Mortgages can only go so high. Mortgages can only go so high. Maybe that comes with an assumption. Is there a buyer in your neighborhood for the homes at the prices that they're currently set at the financing that's currently in the marketplace? Because in mine, there isn't. There's very few. And I get that mortgages can only go so high, but you have to adjust the other side, the price of the asset. And that's not happening yet. Although, and I know all you guys, congratulations, by the way. This, of course, is what happened. I'm on here squawking for like weeks that I think shorting the home builders is a good risk to reward. Everyone, I don't say everyone, because we got a cool little community here who, and anyone out here will take crazy ideas. If you're listening to me, you're open to crazy ideas. So we talked about the potential of a lift after the cut, and if that happens, that eventually people are going to realize mortgage rates are not going to get the relief that they've priced, and if that doesn't happen, then home builders need to price it in. And we had to wait for the third. We got one, then we got two, and we just had to wait for the third. And they poked the home builders, of course, on the week that I'm off. So ITB takes a little bit of a bath down from 130 down to 118. And then what's the other one? What's the other one? XHB. XHB, another one, 126 down to 115. So we had a nice risk reward. I don't think there was a ton of pain that was taken in that. We traded sideways through the whole time we were talking about this, and we got a little bit of a break. What happens from here, I'm not really sure. It's obviously going to be yield dependent, I think, from here. Let's see what else you guys are saying. September 18th was the day the Feds lifted their skirt. Oh, I'm sorry. Rezo, that was a goat. That's a goat comment there, my friend. But you can see what they're doing. I think what everyone likes to pretend like they're just Mr. Magoo. They have no idea. They're losing control of the long end. Go back. I'm tweeting in like March or April, and I'm basically saying if they cut, the cut is the new hike. It's going to tighten up financial conditions. And it sounds crazy, but if somebody as dumb as me can figure that out in March, for people to be looking at them and going, they don't know what they're doing, or they've lost control, it's like, I don't know that that's the case. I think we are normalizing the yield curve, and we're going to do it from 3 to 5, from 3.5 to 5%. Like we're going to be somewhere in that range, and that we're going to normalize the yield curve, and everything else is going to have to price around that. Maybe 5, if we're lucky, 5, maybe something worse. Who knows? If the market returns to a dividend matters era and current dividends are 2%, and market expects 4%. Dividends are 2%, market expects 4%. Have a long way to fall. Stocks have a long way to fall. All right, I'll get to my what do I think happened. So this is the poker player in me. This has nothing to do with, we could look at every valuation metric on the board. Stocks are expensive. I don't care who you are and how you try to explain it to me. Stocks are expensive. But when it's expensive, stocks can go higher. And regardless of what the pot odds are, positioning in this market to me seems a bit neutral to fearful. You don't have to go far. Just look at a VIX at 22. Look at a strong dollar, and a lot of that is not necessarily fear, risk off, or whatever. That's yield related and everything else. But there is a part of me that goes, the pain trade is a melt up here. The pain trade is a melt up. And I think there's one candidate that there's a higher likelihood of the melt up than the other. And I think that if that Iowa poll, if that Iowa poll is 25% accurate in a 30-point margin on independent women voting for Harris versus Trump, if that's even 25% accurate, I'd be a little bit cautious of a melt up here. Which is why we're really careful about short deltas. Me personally, I'm being careful. Now, does that mean I don't want any short exposure? No. I have dumb VIX calls, 30, 40s, and 50s that I've been buying when they were much cheaper than here. And then some out-of-the-money NASDAQ puts, a lot of them laddered down to numbers that it would make you tear up. And the likely probability is that those are all going to expire worthless. So it's just what is the speed of the momentum? If we get a down move, what's the speed and the magnitude and the momentum of that move? And am I able to monetize those hedges at the right time? So it's a convex downside trade while remaining long deltas in the portfolio in case melt up. And so that's kind of the way that I'm playing this. My only problem is it seems like everyone else is doing the same, right? That's why VIX is elevated. Everyone's buying put protection. The market's not really dumping because nobody wants to sell their stocks. Gold's not dumping because there's not a lot of confidence yet. Silver doing silver's thing. Bitcoin's still at 68, but we were as high as 72. So we took off 2% on the Sunday, but it's not like those bets are not still in the market. It's not like Nvidia just took off, 30%. It is now trading at a relatively cheap valuation. That's not the case. So anyways, my whole point is I have no idea who wins. I don't want to say I don't care. Everybody knows that I've been somewhat active, trying not to be some weird partisan warrior. I have a point of view, and I've tried to express my point of view as respectfully and quasi-anonymous, subtly is a better word, as subtly as possible. But quite frankly, once my vote is cast, that's it. That's all I can do. And now I'm focused on how to protect capital and make money in the next week, and if this draws out longer, over the next couple of weeks. And so that's where my focus on. I don't want to be up here squawking about polls and outcomes, because the truth is I don't know. We've got a gigantic binary event in front of us. Has there ever been a day where I come on here and I start to try to speculate whether or not somebody's going to beat on EPS or miss? I don't care. That doesn't matter. We're betting on whether the stock goes up or not, right? Whether vol comes in or not. And so the outcome of the event, I think, doesn't matter in the super short term. And to the bond market, I've argued, I don't think it matters at all. All right, let's keep going. Paul saying, Victor's a true winner. I don't know. We'll see. I might be limping out of this week. I might be limping. New houses not selling here, Brian. They're not going to. I don't get what's hard for people to understand. They're not going to. And we're due. I don't know. My personal opinion is we're due for either a reset or we need monetary expansion, and that means melt up. You're going to melt up, people monetize that melt up, and now more money can go into the economy for spending. But without that, all else equal, with rates at or where they are, it's just this slow pressure on the economy. It's a slow pressure, and it's starting to show up. And you either got to give people money to get in these houses, you got to give them cheaper rates to get in these houses, but you can't just drop the Fed funds rate and think that's going to mean cheaper mortgage rates. That's what was like, that was just so foolish of the marketplace. It's true in a QE environment, but when nobody's buying those bonds and you got to let the market price it, you got to price based on your fiscal situation. And if anyone can show me any plan from any president or Congress or anybody that doesn't say $2 trillion deficit every year out as far as you can see. I mean, I'm one of those weird people. I go and read the CBO budgets, okay? And they put out these two papers. One of them was big ideas to cut the deficit. One of them was smaller ideas to cut the deficit. And I can tell you, in the big ideas, guess what they didn't touch? Corporate tax rates. The CBO was only talking about cutting Social Security, Medicaid, increasing retirement age. Go look at them. It's wild. It didn't even occur to CBO to increase corporate tax rates. That it wasn't even a thing. I'm not saying we should. I'm just saying they're coming after your stuff. Yo, Victor. Did you find Lithium Co's interested for an end of the year long? I'm already long lithium. I'm long Albemarle, ALB, which was a straight up dog with fleas forever. And so at 75, I was like sweating bullets. Yes, lithium's had a nice little rally. I don't know if that has to do with the outlook of EVs into the future, or if that is the fact that is it just me, or are lithium plants catching on fire left and right? Lithium's in this big 2-year glut, and I guess it helps if the market's in this massive glut. If all these plants keep catching on fire, wild, isn't it? This is just a joke, people. I just think lithium, when you're in a glut and lithium stocks are cheap, if you have a long enough time frame, that's probably when you start to look buying them. I have no real short-term point of view on this stuff other than it was pretty cheap. Let's see here. The market makers will need to cover their short positions once election is over and done with. We will inevitably rip higher once that happens. Yeah. I think that so the concept that Trader Ice is speaking to really quickly. I'm going to oversimplify this, right? But let's oversimplify the participants in the game. So I'm a participant in the game. I own stock. I don't want to sell my stock, so I want to buy puts to be protected for an event in the future. I buy the put. Somebody's got to sell me the put. Okay, so I bought a put that gave me negative deltas. Somebody sold a put that gave them positive deltas. Well, a market maker doesn't want a delta position, so they've got positive deltas. How do they hedge the positive deltas? Well, they go out and they sell stock against their short puts, which then gets them to delta neutral. So they're short stock, short puts. What happens? The event occurs. Generally speaking, because vol is overstated, those short puts are gonna take out some of that vol. Me on the other side, I'm going, whoo, the event's over. Great. I sell my puts. They close their put, and because they close their put, they buy in that short position as well. There's more to that. I'm oversimplifying, but the idea is just that concept. You don't even have to buy those back. Just with the put decay itself, you could end up just buying in stock, which then puts some upward pressure in the market. That's sort of the concept. So when we say vol's high, what we're saying is people are hedged. So even if you get let's imagine we get the crazy downside move. Well, me, the put buyer, at some point I'm going to go, all right, I'm going to monetize it. I'm going to sell I made a lot of money on the put. I've lost on the portfolio. At some point, I got to make a conscious decision. I'm not just going to let all this money, I'm not going to let the market go back. Or maybe I might hold that hedge, but a lot of people are going to monetize it. So the question is, what level of pain do you take to the downside where people monetize the hedge, which then creates short covering and a bounce in equities? Or if you don't get the big fearful move, everyone monetizes, and then that's the catalyst for sort of the upside melt up. And I think all else equal, that's the move I think has that little bit higher probability. I know it sounds insane. Then you get them chasing, then you pull the plug. You can't, we're not just going to sit here and go like, oh, that person won, dump. Like, I don't think that's the way it works. You got to hook them, baby. I'm insane. I'm completely, there's too many years of doing this and creating a narrative to the candles I see on the screens clearly driven me insane. Grumpy Mike saying Jill Stein, clearly. Jill Stein, what a monster. They want her to drop out. The Europeans do. European Green Party asking her to drop out. She says no can do. Good on her. VW saying, I'll be happy when we're past this election. That's for sure. I think that's what everyone says. And I don't think it's true. More on that later. Mike said that before he started the show. He said the same thing. I don't think you know what's coming. Still struggling that new single-family homes have 400,000 amp panels. This isn't some mansion, just token tracked homes. My POS shack had a 150 amp panel. Grumpy Mike, I have no idea what you're saying. And that's not a knock on you. That's a knock on me. You clearly have a subject matter expertise in something that you and I need to grab a beer so you can download all that on me. All homes for 100 years have used more efficient natural gas. Not for long. Get ready for electric stoves, everybody, as far as the eye can see. All right, let's talk a couple. I'm up to my usual fine form this morning. So an interesting move that happened while I was gone was this massive upside move in Tesla. Touched 273, and it's just been a straight down move from here, a 242. Let me ask you guys, do you think there's downside risk to Tesla based on the election? In other words, if Trump loses, do you think that there's a likelihood, especially if it's contested after the fact, and especially if there's big demonstrations after the fact? To me, I think that creates risk to Tesla because it creates risk to Elon. Yeah, so some of that, I don't know. To me, the last $30, maybe it's just too expensive. Maybe that's true. Or maybe that's a little bit of risk being priced into Elon there. Bitcoin getting softer and softer here at 67.5, down 1 3/4%. I'm not really nervous about this, though. I know I probably should be. I'm long just a little bit. I cut that position in half. So we talked about a long Bitcoin position before I went on break. That position was expired. I only put on half of it. Who knows if this crazy crayon channels hold and we maybe find support somewhere around 64. But I actually think we could see some vol there. I just don't know what the Harris administration would do. How serious they were about the olive branches that they've extended. And the other thing that happened was a push on recreational marijuana over the last couple of days in campaign promises, which has given a nice boost to MSOS. It blows my mind how this market has just become almost immune to these promises at this point. You used to get these type of promises, and I expected this thing, stuff like that to pump the stock to like $10, and it's not doing it this time around. And the market's been wrong. Hold on. Test. Better? There we go. I think it fixed it. All right. Sorry about that, everybody. Sounds like you suddenly had a mic source switch, Vic. Yeah, I'll switch the cord. But my point is, in the past, when you had these sort of campaign promises on marijuana, that was good enough to get you a 20% rip in some of these marijuana stocks. And this market has been rug pulled so many times by campaign promises, they don't buy it. And I get a 26-cent move on a $7 stock. It's a decent move in percentage terms, but you need to understand like the sensitivity that this thing used to have to these type of announcements was wild. And over time, it's like fool me once, fool me twice. There's a part of me that wants to short gold. There's a part of me that wants to short gold into but some part of me feels like unless it's a blowout, it's too early to short gold. I think. I might be wrong. I do think the right side of this will probably be the short side in the very short term. And so that's part of the melt up thesis, I think. But I don't think you want to go too early. I think if it's a close election on election night and this thing looks like it's going to drag out a little bit, and Georgia's not going to have their results done until Thursday or Friday like they're talking about. I don't want to be too early on this one because the actual uncertainty could actually have the exact opposite effect on gold and push it higher in the very short term. So that's what I'm a bit nervous of. And then silver, man, I'm not touching silver. I'm not touching silver this week. I got enough uncertainty to worry about than adding like massive beta into things. Bitcoin is my beta play. I'm gonna put silver down on the ground. I still have some of the silver miners, which took a nice little chill pill while we were gone. So I'm still holding those. They were always small positions. I think I'm gonna chill on silver. Brian, sorry, I haven't engaged with you guys in a while. Give me a second. I'm going to go bottom up here. Brian Watson saying, why do people keep falling for campaign promises? I don't know that they fall for. Well, I don't want to say that. That's good. Let me start by saying this. It's a good question, Brian. It's a very good question. I think part of it is a large part of our society tunes out policy and incentive structures that govern our world for 3 years and 50 weeks. And about 2 weeks, they tune back in, they find one issue that they care about, somebody makes a promise, somebody doesn't make a promise or makes a better promise, they make a choice, they stamp the ticket. So it's only when you're following through on what that promise was it executed or not? I don't know that we, as a society, frankly, I don't think we hold people accountable to those promises. So I think people can say anything now, right? If we held them accountable, would they feel like they could just say any damn thing for a 3 to 6 month campaign? I don't think they would. But we don't, and so now they just make promises to whatever group I'm standing in front of. Next Gen saying, Tom Sosnoff said he still expects a 3 to 5% pullback from here near term. And I think first call with you. Thoughts on that? Look, Tom's the GOAT. So I agree with him that the pot odds say we should move lower. I agree with that, and I don't think it matters who. I think I agree with him that the pot odds are more juicy to the downside. The problem is, I think most people, when most people see and say that, it becomes problematic position to hold. And so I think a lot of people are trying to position for, you tell me, how many of you guys own puts in your account? How many of you guys are skewing your vol selling to the downside? How many of you have some sort of VIX call or protection in the portfolio, or have, instead of selling naked, you've bought wings behind it? Because all of that then means that you've already sort of positioned yourself away from that possibility. And I think that's what becomes the problem for me, is I just look at there's pot odds there, and then there's a little part of me that goes, sitting across the table, this guy wants to make a play for the pot. This guy wants to bluff. And then you get the little melt ups that nobody sees coming. They monetize the hedges. Now nobody's protected because you made the chase move. You sold all your puts. Now you're chasing the upside because you're behind, because you were positioned for the downside move. Now, in this weird moment of chasing, when you're unprotected, that's what happens. So what do I think? I think I totally agree. I just think I wouldn't be surprised to see a little bit of the opposite, to get everybody puking that stuff now, and then you get that same move, but from a higher level. But I don't know. I don't know. And because I don't know, that's why I own the protection, right? I own the protection to the downside, but I don't want to be net short. And because if I'm wrong, I want to make money to the upside. So I don't want to lose money to the downside, and I want to be right to the upside. Some people want the opposite, right? Some people want to make money to the downside from here, and they just don't want to lose money to the upside. And that's cool if you flip it that way. All right, let's keep saying. Trader Ice, I totally disagree with that. I think he plays a different game than most. You know what I mean? I think we're all playing different. Like, depending on the capital sizes in all of our accounts, you got a $5,000 account, you're playing a different game than the $25,000 account. The $25,000 account is playing a different game than the $100,000 account, who's playing a different game than the $1 million account, so on and so forth. It's like if you're the short stack at the table, you're going to play any decent set of cards, right? You just got to shove. If you're the short stack of the table and you've only got a couple of blinds left, you've got to shove with any decent pair of cards. You're playing a different game than the chip lead at the table, right? And so that's the way I think about it sometimes. That there's no way that I can hold on to a yen position for like 9 months. The way that I trade, it won't work for me. But if I was playing a different game, what's 9 months to be right? You know what I mean? So I just think everybody has to understand everybody's playing a different game, and be respectful of the game that everyone else is playing, and then know the game that you're playing. So when somebody else says something, you can put it in context. This thing is really pissing me off. I'll fix that for tomorrow. I know exactly what that is. The window behind the green screen the shade needs to be closed. That's my bad. Rezo saying, the scariest 4 words I've ever heard. We need a reset. All right, WEF. What's my man Klaus Schwab? How many of you read that book? You know what's wild? I don't think as many people have read that book as I think have read that book. And I think if people read that book, who knows, maybe their perspectives would change on what direction we're headed. All right, let's do it this way. Just a couple more things to say. We'll end a little bit early today. I just need to. Looks like it's from Ghostbusters. A hole into an alternate universe. That's funny. Okay, so the other thing that is a mad head scratcher for me is the dollar. It made sense to me why the dollar was strengthening when yields were going higher. Now yields not doing much. Excuse me, but we're getting weaker now in the dollar, which is a bit of a head scratcher to me. Euro, pound, Aussie dollar. Not so much an Aussie. And I think that has a lot to do with what's happening in oil and geopolitical risk and China, which I haven't talked about yet. I will in a second. That's a bit of a head scratcher for me. So I don't want a lot of dollar exposure. And the fact that Ilya last night on First Call said he doesn't have a lot of dollar exposure, I think he's he's short the British pound, and that's it. And if a guy like that, who's been in the currency market for much longer than I have, if he doesn't have an opinion, I know I better step carefully. It's the poltergeist. It's a sign. I am the anointed one. All right, let's talk earnings for a second. Actually, let's go economic calendar for the week. Let's go economic calendar. Sorry, I should have had this up so you don't have to look at the scrolling. We'll go economic calendar and then we'll go earnings for just a second. So ISM tomorrow. ISM Services Index tomorrow, 10-year note auction, and we've had some sloppy auctions lately. Some sloppy auctions here, man. So the 10-year note auction tomorrow, which will be fascinating. FOMC starts on Wednesday. Mortgage applications again. Every Wednesday we're going to get these. And it doesn't matter to people, but I keep watching them. There was a little bit of a bump in purchases last week. Nobody's refinancing, of course. Petroleum status report. A lot of that's usually priced in. But the big one is going to be FOMC announcement, maybe consumer sentiment, but it's really this one. FOMC announcement. We just cut 25 bips and we get a nice little press conference. How wild is that going to be? Oh, Hans taking off. Okay, see you, man. I'll do a couple of earnings here, and then we will call it. Let's go. Tuesday morning. Again, there's some part of me that thinks the stuff that you never paid attention to, the stuff that you never paid attention to is the stuff that you're going to get the largest, the big moves, like the DuPonts of the world, the Yum brands in China. A lot of this other stuff is boring. And Marathon Petroleum, a lot of energy and utilities on Wednesday. Let's see. Here's the big one. Marathon Oil. I'm long Marathon Oil. Match Group I think will be interesting as well. Friday, it's one of those, when we're deep in the earnings season or midway through the earnings season, you're going to get a few energy companies on Friday, this week and next week. Ugh, that's all you got? Moderna. Ugh. Not much. Not much good stuff. SMCI. Who's excited to trade SMCI's earnings? Yeah, the S&P is the worst trader. I think I've seen statistics on this that when the S&P adds something, it is in terms of like its next year performance, it's horrific. And when the S&P drops something, its next year performance is above average. So, there's a few notable exceptions, right? Tesla, but at the time, Tesla was like, 25% of the float or something like that was held short. It was one of the most shorted stocks in the marketplace. So you add that to the S&P 500. Now a bunch of people got to add that to their ETFs and portfolios. You got the exact opposite. So that's one of the notable outliers. But in general, the S&P adding something or removing something, you do the exact opposite in that underlying. Speaking of stuff getting added and removed, this will be the last one and we'll get out of here. Intel. Intel, good Lord, what a dumpster fire. Intel's getting removed from the Dow Jones, and in its place, guess what? If we didn't have enough concentration risk across our entire marketplace, let's add some more. Let's add some more into a price-weighted index. Let's add NVIDIA. NVIDIA is going to be replacing Intel in your grandfather's favorite index in the Dow Jones Industrial Average, which is kind of an interesting little marketing move, because nobody cares about the Dow right now. But you add a little high octane into it, a little beta into it, both the up and downside, mind you. People are going to be paying attention to Dow a little bit more. But I bring this up more so to talk about this Intel story. And I'm only talking about this again because we had talked about it before, and I'm just following up. And I think we had talked about selling downside puts in Intel. Not because at the time vol was really high. At the time vol was dumb high. And, it's kind of juicy now. And we could sell some deep out of the money puts, and it seemed like it was pretty decent risk and reward. And the thinking behind that is, at this point, is the taxpayer pot committed? We had the CHIPS Act gave them $8 billion in cash, $11 billion in favorable loans, I think, and then $20 billion in favorable tax treatments. So just like $40 billion in helicopter money in some way, shape, or form, which I do not believe has all been deployed to the company, but it earmarked it. And the point is, well, once we're there, what are we going to cut? We're just going to let them fail? Probably not. Even if they make poor management decisions at this point, we're probably going to throw more good money at bad ideas. And so why not sell some puts? And even if they put it to us, we're just riding the taxpayer money at that point, which is our hedge, because you're paying taxes anyway. You might as well get some capital appreciation out of it. Anyways, the point is, it traded sideways and just losing its position in the Dow. I think I even read that they were charging their employees $2.50 for coffee in the office now. Mighty. Wow, how the mighty have fallen. I still think this is an interesting short put play, and I don't care if you guys hate me for saying that, because they're going to bail this. They're going to bail this thing out. And aren't you glad? Aren't you glad that all your taxpayer dollars are going to bail out companies that lost the semi race through poor management and poor innovation? That's a good use of our money, is it not? Not everyone gets a free lunch like at Tasty. Hey, I work from home, Grumpy Mike. I don't get a free lunch. I guess depending on how you think about it. Are those tax write-offs? Maybe I should look into that. The problem is that you don't get paid a ton to go out to December. So I don't think this is our time. But I'll tell you what, if we can get some election volatility, if we can get some election vol that can pump up these Intel puts, I'm going to sell something in there. And I know what you're thinking. Victor, what is your deal, man? Why do you go buy Boeing when it gets blown up, or Albemarle when it's blown up and we're in a lithium glut, or Intel, these dog companies? Because I'm crazy. That's why. All right, everybody. It's been good getting back. We got a big show tomorrow, Tuesday show. Chris Vecchio is going to be on with us. Obviously, it's an election day. We got the election unspecial on tomorrow evening, which I will be on. I hope all of you are going to join. I'll be likely tweeting like a madman. If you want to follow me at Victor Jones, the O in Jones is a 0 because I like to be difficult. But I will say this: I am unafraid to speak my opinion in all things. So whether that's a trade idea, a long or a short, or a reaction to some political stuff out there, I think I'm pretty fair, and I think I'm critical of both sides. I just want you to be aware. If you do follow me, I'm unafraid to go into all types of topics. I want to say it's awesome to be back with all of you. Hit the like button if you would be so kind. If you haven't subscribed to the channel already, leave me a comment. And here's the question that I have for all you guys to end this show. This question is going to send Tom Sosnoff through the roof. But my question to all of you is, what is not priced? That's the worst way to ask this question. The best way to ask it is, what do you think has the most asymmetric risk to reward in the marketplace for this week, given everything that we know is on the calendar, that we can know, and all the things that we cannot? What is your most asymmetric trade where you can put on $1 to make 3, put on $1 to make 5, 10, whatever you think that is? I want to know what your asymmetric play is for this week. Do me a favor. Don't put it in the chat. Put it in the comments below. I want to see what everybody's saying and thinking. A lot of that I will share with my ideas tomorrow on both the show, The Price of Truth, as well as the election on special. I hope you join me. I will fix this craziness going on behind me. I apologize for that. I'll see you back here tomorrow, same time, same place, same great network, only on Tasty Live. Until then, peace.